Hello and welcome to Blocks Live TV. Today is Thursday, July the 11th. We're now live with the latest in the crypto world. Well, it's 9:30 a.m. in New York City, 2:30 p.m. in London, 10:30 p.m. in Tokyo, and 3:30 p.m. here in Malta. Jason Fernandez and Kevin Mirko will be discussing the crypto markets with us on today's show, but first we'll take a quick look at some of the market indicators. Starting off with the cryptocurrency index CCI 30, it has plummeted by nearly 700 points south of the 5,000 point mark. The index stands 7% in the red so far in July, and its year-to-date gain has eased back to 100%. The 30-day Bitcoin volatility index remains virtually unchanged at just over 5.5% yesterday. The CoinMarketCap website's 24-hour traded volume indicator has surged to more than $100 billion as the markets took a steep decline. The Messari website's real 10 volume has jumped towards the $6 billion mark. The market share of the crypto king has continued to increase. The Bitcoin dominance indicator now stands at 65% level. The top 5 digital assets are all down by double digits. Starting off, we'll take a look at Bitcoin, which has plummeted after rising above the $13,000 mark to give us more than $1,500 from yesterday's high. Ether is down by nearly 12% to find support around the $270 level. XRP stands 15% in the red. A couple of sharp declines have taken the price towards the 33% mark. Litecoin has returned to the 4th spot by market capitalization, but that's despite trading at just slightly more than $100 US. Bitcoin Cash has suffered the most among the top 5 digi assets. Its decline of close to 20% has brought the price down to $340 US. Now taking a look at the Coin 360 heat map, it shows a sea of red. The shade is particularly dark today as the majority of the digital assets have plummeted by a whopping double digits. Now, according to the Token Spread website, the Gemini and XMO exchanges have the biggest price difference for the Bitcoin dollar pair, and it's 1.3%. The XMO exchange has the biggest spread today, and it's almost 0.3%. We'll now take a quick look at some of the characteristics of Fetch. This is a decentralized digital representation of the world in which autonomous software agents perform useful economic work. Now, this work does stretch to include providing services and delivering data, which is then rewarded with the Fetch token. Now, there is a fixed number of divisible tokens, and they were sold for nearly 9 cents during the Binance Launchpad initial exchange offering. As of today, they can be purchased for 12 cents. We'll now review the performance of the various cryptocurrency asset classes as grouped, as we can see here, by the Messari website. We'll start with the infrastructure group, which is the most bearish asset class today, with a sharp decline of 14%. The media and entertainment category follows closely, and it stands just under 13% in the red. The financial sector has declined the least, but it's dropped by close to 10%. The currency category has also plummeted, and this time it's by 12.5%. Assets are down by double digits across the board here. And lastly, the services section is having a bearish day as well, with an overall decline of more than 11%. So that's where the 5 major cryptocurrency categories stand so far on this Red Thursday. Well, we'll now take a quick look at some of the most significant moves among the top 100 cryptocurrencies, and then we'll be back with our crypto experts after a very short break.
180 different countries all around the world, which makes us grow in like a sphere.
We are stronger than ever.
Have these questions answered without disclosing anything.
AI field is mostly controlled by a few large corporations.
Much busier, bigger than ever.
In the mid-2020s. I do think that will come.
We should kind of keep in mind that we want the world to be a better place.
$15 billion a day. This is incredible.
People find a way to create infrastructure.
I think knowledge is one of the most important things in the world.
We laid the foundation for the distributed trust model that Satoshi builds on.
It does come with some risks, but at the same time, I think it's an opportunity for countries.
Individuals miss the boat on a market, they miss the boat. When the institutions miss the boat, they bring the boat back.
This is Blocks Live TV.
We're back and we're live on Blocks Live TV. We're back to discuss the markets with our crypto experts, Jason Fernandez, COO and co-founder of AE Token, and Kevin Mirko, CEO of the Coin Metro Exchange. Jason, Kevin, great to have you both on the line today.
Hey Jessica.
Hey Jessica, great as always.
Great as always, you're right. Now we're going to jump straight in and talk Bitcoin. We are seeing some resistance around the $13,000 US level. And I want to ask you both your opinions on what we have seen. We're seeing it crossing the $13,000 level yesterday, followed by a double-digit crash. And this week's earlier gains were just completely wiped out. Kevin, I do want to start with you here and just ask you how you're interpreting the recent moves we've seen.
Well, the last time I shared the screen with Jason, I think we talked about Bitcoin kind of heading up towards the 14,000 figure. And I think we're still, I don't think my view on that has changed, though key figures, you're always going to see lots of profit taking. I think if you look back to the last time we hit 13 just recently, I think that's when Mike Novogratz from Galaxy Digital famously came out and said that they sold a large chunk of their Bitcoin position, and he wished he had sold more. And not because, then he came back to rectify that statement and say not because he thought it was going to crash from there, but just simply that, you know, when you're a professional investor, you take profits when it makes sense. When the market tells you should take profits. So I think that, you know, the kind of when you look at retail traders in general, and this market is still driven by a large percentage by retail investors. Retail traders and retail investors, that there's kind of a, I guess to me it's a misnomer out there that says that retail investors get smarter. It's not so much that they get smarter, because most retail guys always make the same mistakes, but they do learn from those mistakes. So they don't necessarily get smarter traders, they just learn from their own mistakes. And I think that lots of guys are starting to see that, you know, just being a hodler, well, doesn't necessarily pay the bills when you're in, you know, some type of bear market, or you're seeing large retracements, or you're sitting on a position that's losing for a year and a half. So we're starting to see a more intuitive retail trader that basically starts to take profit around key levels, and they're probably starting to delve into other ways to find support and resistance, et cetera. So this happens in any market, right? It doesn't happen with the same veracity, mainly because other markets are more liquid. And other markets aren't fueled 100, near 100%, let's say, or very high 90% by retail money. But this type of flow you're going to see regardless. And the fact that Bitcoin keeps rising. I mean, now we're at 65%. I think last week we talked about 63% in terms of the liquidity that Bitcoin holds in the market. So there's obviously some new money coming into Bitcoin. That also means that these could be day traders. They could be people that are looking to take profits, quickly off the board. So maybe they bought in at 11, 11.5, 12, whatever. Hits 13, they start taking profits. Now they're looking for a new re-entry. So I think it's just the fact that the market's expanding. As the market expands, we're going to start to see correlation to more mature markets in terms of price action. But at the same time, it's still retail driven. So we're still going to see lots of volatility.
So would you say this is actually just normal profit taking in the markets? A market loss of more than 10% isn't something that's particularly surprising or concerning to you, Kevin?
On something like Bitcoin, on an asset like Bitcoin, yeah, it's normal. And yes, it's not that concerning, because if you look at the way Bitcoin actually moves, the price action, the way it actually moves on a daily basis, 10% is probably within the range of what would be considered maybe high, let's say more of your higher end move. But it's still not, it's definitely not the highest. It's definitely not the lowest, but it's probably somewhere mid-range. So I would say no, it's kind of par for the course for Bitcoin.
Okay. And Jason, what's your thoughts on this? What's your thought on the recent kind of resistance around 13,000, a significant drop that we have seen across the board? How are you viewing the recent market moves?
So yes, I'd agree. It would obviously be a very mid-range difference. So normally we're used to seeing something like 6 or 7%, 8% also is fairly normal to see in crypto. We've also seen highs and lows of like 22% in like one day. We saw that on the 26th just recently. So again, something like 10% isn't out of the realm of possibility. It did drop sharply over the last 24 hours, but I think the outlook remains bullish, especially because the prices are holding above a key support level that's $9,600. But even anything over $10,000, is still a good place to be. I think there was a flood of offers around 13,200 yesterday, and then later it fell to a low of 11,164, and that was on Bitstamp. And I think one of the main reasons that happened in the first place is because there was sort of a sharp pullback after the sort of U.S. Federal Reserve Chairman Jerome Powell essentially said something like that Libra couldn't go on without serious concerns regarding privacy, money laundering, consumer protection, and most importantly, financial stability were addressed. And that sort of indicates that the regulations are not quite set up to deal with cryptocurrencies. And a lot of people obviously feel that that sort of analysis could extend to Bitcoin as well. And essentially, the comprehensive regulations are coming down the pike, and maybe those comprehensive regulations may not be beneficial to Bitcoin. Certainly, if it's not beneficial to Libra, Bitcoin might become collateral damage in that whole situation, because Bitcoin is fairly small right now, but when you have somebody like Libra come in, it sort of forces regulators to come up for air and take a look and sort of evaluate the situation. And I think a lot of people are thinking maybe this may not be good for Bitcoin in the long term. But I think overall there's tons of positive news in terms of long-term outlooks for Bitcoin. Most recently we've seen big differences when there's financial instability in other markets. We've seen a lot of interest in Bitcoin grow. Recently we had Donald Trump accuse China and the European Union of sort of manipulating their currencies and pumping money into the economic system to compete with the U.S. And he sort of implies that he wants Jerome Powell to essentially debase the U.S. dollar, specifically to make American exports more attractive. And that would result, obviously, in lower interest rates and a cheap dollar. But Bloomberg updated its federal funds rate prediction for the next 13 months, saying there was a 100% chance of a rate cut, meaning more money printing, more quantitative easing with a lower interest environment. And sort of when you have higher quantitative easing, that sort of makes a point for Bitcoin and some sort of situation where you have a non-sovereign, hard-capped supply, a global, immutable, and decentralized digital store of value, which is essentially Bitcoin. It sort of makes a case for that. So overall, I still think that that Bitcoin, the outlook is pretty good for Bitcoin, even in the near term.
Okay, and it's interesting that you've mentioned Jerome Powell there, because I did want to ask, we did see that the Fed chair actually testified before the House Financial Services Committee in Washington yesterday. So Jason, carrying on from what you've just mentioned, this committee, this testify, did last about 3 hours. One of the hot topics was, as you mentioned, Facebook's Libra cryptocurrency. How do you view this increasing intention from regulators? Does this bounce back to what we are seeing? And you're saying that there is some correlation between what we are seeing from Libra and regulators and the price of Bitcoin. Do you think there's a correlation there?
Yeah, so I don't think that I don't really view the increasing attention from regulators as a particularly good thing. Certainly, it's not done the market any favors. Apparently, what Powell said as far as that Libra raises serious concerns about privacy, money laundering, sort of financial stability. That's really dangerous for people that are looking at cryptocurrencies as a broad asset class, particularly Bitcoin, and are seeing how the Fed's view towards Libra is going to sort of trickle down to their view towards Bitcoin. So in fact, he's actually said that the project can't go forward until these are addressed. So that's something that seems to be fairly troubling. And apparently the US accounts for something like 26% of Bitcoin activity. So something that would affect Bitcoin, particularly in the US, would have a massive effect on the market in general. And essentially what his comments sort of imply that US watchdogs are looking to clamp down on basically the likes of Bitcoin in the coming months, and that sort of is what the indication is. And that's sort of similar to what we're seeing from central banks around the world. We know that India has said that they're not going to allow Libra, and essentially various different countries have basically said the same. So we know that the European Central Bank has come out and said that cryptocurrencies are shaking the system, and that could be some sort of prelude to more aggressive regulation from the European Central Bank. In fact, last week, a European Central Bank executive described Libra as a wake-up call for regulators and said it could not operate in a void outside the typical structure of central banks and regulation. So it's certainly pretty troubling for Libra, and we all expected this when they first announced it, that they were going to have face up against some really stiff legal regulatory concerns.
And Kevin, I want to ask you if you have the same thoughts as Jason when we do talk about this global attention that we do see from regulators when it does come to Facebook's Libra cryptocurrency. How do you view this? Do you view this as good news, positive for the space, or negative and potentially a setback?
It could be either, to be honest. I don't think anybody really knows if this will be positive or negative. Generally speaking, this is going to happen anyway. Regulators generally follow a trend around the world, and that's at first when something's too small, they say that it's a scam, stay away, don't do this, don't do that. They did it with unregulated effects. They do it with crypto. They did it with even derivatives before the derivatives market was actually started to become regulated. So, of course, not for retail guys, for derivatives. But at the end of the day, this is how regulators work. Once there actually is some type of adoption, that's when they try to regulate. When adoption moves too quickly, however, they almost get back to square one, where they start to think, well, if and what happens with Libra is that you're going from maybe let's say figure X right now of the people that know what crypto is, whether that's 2%, 10%, 20% of the world, whatever it is, and you're going into now basically one of the biggest countries in terms of actual population, which is basically Facebook's ecosystem, that will now maybe potentially know or get into this market. So that changes the game for regulators, because it means they need to act much quicker, because they don't have to wait for the adoption to reach such a mass scale to really start to look on how they can regulate different aspects. I think Facebook made a mistake of calling this a cryptocurrency, because to be honest, it seems to me that it's a payment gateway, and it's a way for them to monetize pieces of their ecosystem that they couldn't monetize before, and do it and save money doing it, and then bring in the guys who would compete with them, so MasterCard, et cetera, inside of their node network, so that basically these guys pitch in a little bit of money on the hopes that, well, if it works, then we can adapt our own ecosystem so that we don't lose clients and we don't lose revenue. If it doesn't work, it's a small gamble. And I think the real focus of regulators isn't so much Libra itself, because remember, all these things are going to be backed or pegged to US dollar, pounds, euros, or whatever. They're going to hold all these in some type of account somewhere, at some bank, at some financial institution. They're going to earn interest on that money, and they're going to pay that interest back to nodes using a security token. So what the real concern of the regulator is not so much the Libra coin itself, it's the fact that they're creating a central bank. They're basically going to be holding huge amounts of currency in reserve, and they're going to use that reserve to monetize it and basically earn interest. That's exactly what it's one of the things exactly what a central bank does. And then they're able to actually dictate policy among those nodes about how the Libra can be used. Again, something a central bank does. And if they decided to print more, guess what they're doing? It's quantitative easing. It's exactly what a central bank does. So it's not so much about the token itself, it's about the way they structured it. And I think that what was going to happen is Libra will probably move forward, but it's probably going to be restructured, and mainly because of the push from regulators. And Bitcoin and Ethereum, et cetera, are not structured that way. So I do think the concern they have now will not roll over so much into Bitcoin, Ethereum, or let's say your major cryptocurrencies. But it's really focused on the way they structured it, because they're basically making themselves a virtual currency central bank.
And even Jerome Powell has spoken out and actually said that for the first time here, based on the amount of users that Facebook does have, this is the possibility of very broad adoption. So Kevin, I want to follow on from what we've just said. Do we see this as a way that for the first time there is possibility of a very broad adoption of a cryptocurrency? If we do see this progression, this is potentially huge.
Potentially. I still don't think Libra is a cryptocurrency. So for me, I think it will bring eyes into crypto, because they're marketing it right now as a cryptocurrency. So it does bring eyes into the game, which is a huge benefit regardless. I mean, they're Facebook, they have, again, I've said this a million times on the show, but I'll say it again for people who haven't heard me. My ex-wife has 77 Facebook accounts. It might be 78 now. which means, those 2 billion users, that's probably not 2 billion people, but there's a lot of people, right? It's still one of the biggest population centers in the world. So I think that we still don't know how open the Libra will be. Will you be able to trade Libra into Bitcoin? Will they allow exchanges to actually list this thing outside of their testnet? Will we actually be able to move easily between a cryptocurrency and Libra? Will people use it like a stable coin? Will it really just be used as a payment gateway, as a payment token inside of all the different ecosystems that are connected by nodes or whatever into that payment infrastructure? I think those questions still remain a bit unanswered. So it's hard to tell really what the effect will be. If it's an open ecosystem and you can go between Bitcoin and Libra, right now people go through Bitcoin because it owns 65% of the market, right? It is where you go for liquidity. But what happens if Libra outtakes Bitcoin? That could be bad for Bitcoin, obviously, in terms of it being a payment solution, which a lot of people think Bitcoin is. They think it's a payment solution. So it remains to be seen, one, how it's not going to be structured how they say it's going to be structured now. They're already under regulatory review. They have central banks looking into it. They will restructure a bit. Then depending on how they need to restructure, we need to see exactly what they release. And that's the only really way we're going to be able to know 100% certain whether it's good or bad or neutral. I tend to think it's going to be neutral at the end of the day.
And Jason, what is your thoughts on this as well? A lot of people are saying that for the first time there is a possibility, very broad adoption for crypto from Facebook's Libra project. We've heard Kevin's thoughts. What's your thoughts on this?
So I think that, yes, it's true, there is some possibility of broad adoption, but I think it's been massively overestimated. So I'd say if you look at Facebook's main markets, the top 3 countries are India, the US, and Brazil. And essentially, if you look at India and Brazil, it's something like 450 million users. Most of that is weighted towards India with 260, and the balance with Brazil. And India has already come out and said that they will not allow they will not allow Libra, they will not allow cryptocurrency in general, most likely, but they're certainly not going to allow Libra into the country. And Facebook has said that they're not going to launch in India because they know about the regulations in India. And the same thing is not fully true with Brazil, but Brazil hasn't really shown that they're super positive with cryptocurrency. We know that Bolsonaro, who is Brazil's president, recently stated that he didn't know what Bitcoin was. He also suspended a project that would have created a crypto for indigenous people to sort of transact between themselves, and said that the minister who killed that project was wanted to teach the Indians how to use Bitcoin. Of course, he wasn't talking about Indian Indians, he was talking about the Brazilian Indians. But essentially he said that he was not particularly pro Bitcoin, and though eventually he clarified that it was a virtual currency, he knew that, he didn't seem the least bit interested in Bitcoin or interested in basically it being legal to any extent. So you're looking at India and Brazil as 2 of the largest markets that Facebook is just going to be locked out of. So essentially they're only kind of playing to the US right now, and they're in enormous problems in the US. So I think it's massively overestimated. Like if you take out the US, India, and Brazil, Facebook coin is practically dead. Libra is practically dead. So I think it's vastly overestimated what a big impact this could have, particularly if you take out those countries that have actually said that they're not going to have anything to do with it.
Wow, okay, so now I want to move on and ask you about a report that we have seen from the Wall Street Journal, which has said that the SEC, the Securities and Exchange Commission, has cleared Blockstack to hold the first regulated token sale. And I want to ask you both your thoughts on this. This is going under the regulation of A+. And I want to hear, and we'll start with you, Kevin. What are your thoughts on this model? Does this compare with the initial exchange offerings that we are seeing that have gained quite a lot of popularity so far in 2019?
Done this a year and a half ago, it would have actually been quite a leap forward. But what they've done, so most guys that went through the U.S. and actually raised in the U.S., they got a Reg A exemption or a Reg D exemption. The only difference here between the exemption and the actual Reg A offering is that the amount of money they can pull is higher, and the amount of retail investors they can give access to is higher. So yes, they raised a few barriers, okay, but they spent $2 million to actually get this little piece of paper that gives them the right to have this offering. They could could have spent a similar or probably smaller amount of money and done a small IPO on a secondary market and raised the money within a few hours with underwriting. So I think that, one, I think this is a stupid move on their side, to be quite honest. I think the lawyers should probably be slapped around a bit and maybe turned upside down and get some change out of their pockets back. But I don't know. To me, it's not a game changer any way, shape, or form. The U.S. is not completely against accepting Reg A offerings. They do it quite often, and even tokenizing it, to be honest, especially now because they're starting to understand more about a tokenized market. That's really nothing different than a depository receipt in most jurisdictions. Is not that difficult, but you see how much it costs. The whole reason to do an offering on a blockchain, well, one of the main reasons is cost, is that it's significantly cheaper and more streamlined. So if we're going to pay $2 million every time someone wants to do a Reg A offering in the U.S. on a tokenized security, there's no reason to do it, to be quite honest. It doesn't offer you any advantage over a normal Reg A offering for the most part. So I don't see so much. It got some headlines. That's great, but I don't see really any game changer here. Like I said, it was 2 years ago maybe. Okay, so too little, too late, not a game changer. From Kevin, Jason, what's your thoughts on all of this?
Yeah, so it was been much better if they released this sometime around, this happened sometime around the ICO craze in 2017, 2018. But it is sort of, I think, significant that this is sort of the first tokenized Regulation A offering. And I think that sort of does open a funding source for other companies that might choose to go down this route. Of course, their mileage would vary. It would be something that they'd have to look into, whether it's really something that works for their business. But apparently this is part of the whole Jumpstart Our Business Startups Act. So the Jobs Act, and it was sort of a new law to sort of help with raising funds from sort of crowdfunding, and sort of that was a law that was supposed to govern crowdfunding. Apparently, the Blockstack had previously raised some $47 million through a previous token offering, but that was Regulation D, and that does not quite require SEC approval, but apparently it was limited only to accredited investors. So this sort of opens it up to non-accredited investors. But yeah, as Kevin said, it's sort of too little, too late. But it does. I think it does offer an alternative. It may offer an alternative to some companies that might consider doing it. Okay, well, fantastic. Thank you both so much for sharing your insights throughout today's show. It's been an absolute pleasure to speak to you guys. As always, thank you so much for your time today.
Thank you, Jessica.
Thank you. Take care. Well, before we sign off, I do have a last-minute update from our editorial staff regarding the crypto market. The majority of the cryptocurrencies have remained in the red. Total market capitalization stands south of the $320 billion mark. Trading does remain active. The CoinMarketCap website's daily traded volume is edging up towards the $110 billion territory. Bitcoin remains down by double digits, but it has increased slightly from the intraday lows. Well, that's all for this Thursday's Crypto Now live show. We thank Kevin and Jason for their expert analysis. I'd also like to thank you, the audience, for joining us, and invite you all to accompany us every weekday at this same time.